during his ministerial appointment in 2023. Presidential spokesperson Bayo Onanuga confirmed Naji's resignation in a post on X. Naji has denied the accusations of forgery and has insisted that he did graduate from the University of Nigeria Nsukka with a degree in microbiology and biochemistry. An organisation called the South African Church Defenders have called on government to fully protect the constitution of churches. Hundreds of members marched the union buildings against the establishment of the Section 22 Ad Hoc Committee by the CRL Rights Commission. They've accused the commission of trying to control and censor churches. The committee was established to investigate religious and cultural matters with the aim of protecting congregants from abuse and promoting self-regulation. The group's representative, Professor Theophilus Mukuba, says the proposed system violates the rights of churches to self-govern.
The proposed peer review system violates the rights to religious freedom, freedom of association, and the right of churches to self-govern. Number two, unnecessary. South Africa already has strong laws to address abuse and criminal conduct. The problem lies in enforcement, not in the absence of laws. Religion has never been a defense for crime.
U.S. federal data shows that irregular crossings at the U.S.-Mexico border have fallen to their lowest level in 55 years. The figure showed that in the fiscal year 2025, which included 4 months of former President Joe Biden's administration, U.S. Border Patrol agents stopped 238,000 migrants. The data indicates that during President Trump's first 8 months in office, there were fewer than 9,000 irregular crossings recorded each month. The BBC's Mimi Swabi has the story.
The significant drop has been brought about by strict policies at the border and within the country. Mr. Trump has militarized parts of the frontier, closed down the asylum system, and stopped releasing detained migrants into the US interior. Instead, they are quickly deported or held in detention centres while their cases are reviewed. There's also been an aggressive crackdown by immigration and customs enforcement.
Recapping the top story this hour, the South African government says no ransom was paid for the release of South Africans who were part of the global Sumud flotilla. For any news stories you would like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa News, I'm Jolani Tulo Mwepe.
SABC News. The African perspective.
In our sports headline, all roads lead to the Union Buildings for the Region 5 Marathon. The amateur golf players are prepared to tee off in the $145,000 tournament. I'll be back with these and other stories at the bottom of the hour.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 7 minutes after 4 p.m. A very good afternoon to you, Africa. A lot in store for you today. We'll be looking at some results coming out of a study done by Liberty on how various South Africans have spent parts of their retirement monies from the two-pot system. And you may be surprised, or maybe you won't be surprised, on how those monies were allocated. And also we'll look at some discussions that have been taking place at the back of Africa Energy Week between Angola's state-owned national oil company and a Frixum bank. That and a whole lot more coming up for you this afternoon on Africa in Business. It's gone exactly 8 minutes after 4.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
And I'd like to find out, actually, this is a conversation that we had earlier on with the team. If you were to access your retirement funds, how would you spend them? How would you spend them? What would you do? And let's not throw forward to a time in the future. Let's say that time was right now, in your current situation, with your current businesses, with your current investments, with your current debts, your responsibilities. How would you spend your retirement money if you had access to the two-pot retirement system? You can find us on our various social media platforms. I'm really quite keen to hear what your responses are. And especially if you did actually withdraw from the retirement, what did you actually do? How were those funds allocated? On X, Instagram and YouTube, you'll find us at Channel Africa 1, and on Facebook we are at Channel Africa.
Africa in Business. Africa in Business delivers key insights and real-time updates on Africa's growing markets with Thami Ngubeni. The African Perspective on Channel Africa.
Channel Africa.
In this episode of Channel Africa Conversations, Peter talks to Dr. Thulisile Buddha, an academic, author, and an expert in indigenous knowledge systems. Join us for a compelling discussion on preserving African languages and traditions in the digital era. Dr. Thulisile unpacks the role of educators, explorers, and how technologies like AI can support cultural preservation, and challenges us to rethink how we honor African heritage. You can find the episode on YouTube, SABC Plus, and on our website, channelafrica.co.za. This episode is a must-listen for educators, creators, and change makers across the continent. Channel Africa, the African Perspective. The 14th Oppenheimer Research Conference is fast approaching. Convened by the Oppenheimer Generation Research and Conservation, it's one of Africa's leading platforms for natural and environmental science, enabling young researchers to mix with experienced trailblazers to help translate their research into real-world solutions. From the 15th to the 17th of October, attendees will discuss topics ranging from land management, biodiversity, to wildlife economies. Channel Africa will broadcast live, spotlighting some of the African voices, shaping meaningful approaches to some of Africa's most pressing challenges. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
We begin here this afternoon with the poultry industry, which has cautioned that the expired African Growth and Opportunity Act, AGOA, and the rising chicken imports from the United States will disadvantage local farmers as well as producers. They argue that abandoning anti-dumping rules to allow the United States to export duty-free chicken into South Africa nullifies the poultry master plan. Local producers say the impact of unfavorable trade terms is expected to adversely affect South Africa's 72 billion rand poultry sector, which employs over 100,000 workers. Naledi Ngobo reports.
Fair Play, an anti-dumping movement, argues that poultry dumping is an unfair trade practice which allows chicken importation at unfairly low prices that drive local producers out of business and cause job losses. In 2015, South Africa agreed to America's demands to remove anti-dumping restrictions on U.S. chicken imports in exchange to secure broader benefits under AGOA. CEO of the Poultry South Africa Association, Isak Breitenberg, says the poultry industry is being sacrificed as a bargaining tool to negotiate down the 30% U.S. imposed tariff on South African goods.
We have a poultry master plan that says we need to get anti-dumping duties to produce more chicken locally and import less and less chicken. The self-regulation that was allowed for the US and immediately implemented without any reciprocal benefit for South Africa, there are tons and tons of chicken. We talk up to 30,000 tons of chicken on its way to South Africa. The second thing is that the AGOA agreement is lapsed. In terms of the AGOA agreement, we've lost all our benefits for exports to the US.
Chairperson of the Budget Justice Coalition, Matshidiso Leokasa, says there are clear links between food insecurity and unfair trade deals.
So when trade deals prioritize these export crops over the food crops, or for example, we can also extend this to the poultry arguments. Yes, we may earn some foreign revenue, but unfortunately there is still substantive hunger at home. And we really see that true food security will mean building fair trade terms that also protect local producers, stabilize prices, and ensure that every household can afford nutritious food, can have access to good quality poultry in this case, so that we're not just looking exclusively at boosting our export numbers, but what do these export numbers mean for ordinary South Africans?
Ayanda Ngumeshe of Tshwane University of Technology says South Africa must consider the trade-offs carefully as the U.S. is using chicken dumping to negotiate the renewal of AGOA, which expired last month.
So the AGOA is immensely valuable to South Africa. We need to agree to a certain degree here because it gives our wine, citrus, macadamias duty-free access to the US markets, and therefore losing the AGOA deal would may cost us significantly. However, the danger is that poultry becomes a bargaining chip here. If we concede too much to keep the AGOA, we could sacrifice an entire domestic value chain.
I'm Naledi Ngcobo in Johannesburg.
It's 15 minutes after 4 p.m. Central African time. Do remember our question for this afternoon. It's all around how you would allocate your retirement funds if you had the opportunity of withdrawing just a portion of them. And I'm asking this in the backdrop of the two-part retirement system. It's one of the conversations we will be having later on this afternoon. If you did withdraw some funds, how did you allocate them? What did you spend them on? And maybe if you did not, what would you do if that opportunity arose right now? You'll find us on all our various social media platforms at X, Instagram, and YouTube. We are at Channel Africa 1, and on Facebook, we are at Channel Africa. It's 15 minutes after 4 p.m.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
Now, policy makers, tax experts, and development partners from across the continent have converged in Johannesburg, South Africa, for the 13th Pan-African Conference on Illicit Financial Flows and Taxation. Held under the theme Honoring a Legacy, Building a Future, the gathering aims to assess Africa's progress a decade after the landmark high-level panel report, focusing on how the continent can strengthen tax justice, curb illicit financial flows, as well as safeguard resources for sustainable development. For more on this, we joined this afternoon by Mr. Briggs Bomba, Programs Manager, Trust Africa, and member of the Stop the Bleeding campaign. A very good afternoon to you, Mr. Bomba. Good to have you with us. Welcome to Africa in Business.
Good afternoon, and thank you for having us.
So it is 10 years after the high-level panel report. How would you assess Africa's progress in curbing illicit financial flows?
The continent has made notable strides. To start with, the collective voice of Africa regarding stopping illicit financial flows is no longer ignorable. It's become louder and louder, and it has shaped global discourse around global financial architecture reforms, around global financial governance. And internally, we've also seen quite a lot of improvements in terms of tax compliance. If you look at countries across the continent, we've seen improvements when it comes to curbing trade misinvoicing, which is one of the biggest avenues through which we are losing finance illicitly from the continent. And we've also seen, if you look at countries like Rwanda, where tax digitalization has been brought in and has demonstrated capacity again to increase compliance and to contribute significantly to domestic resource mobilization. So it's partial progress. There's a lot of work that still needs to be done. As you are aware, we are still talking of anything around $88 billion to $100 billion still being lost through illicit financial flows every year. So it's a long fight, but the tools, the mechanisms, the frameworks, and the cooperation that's needed has been demonstrated over the last 10 years.
And where are the gaps? Where are the bleeding points as far as a tax collection is concerned?
So if you look at our context as Africa, the biggest source of illicit financial flows is from the extractive sector. And in the extractive sector, you are looking at your high-value minerals, such as gold, diamonds, and the main mechanism through which we are losing resources by illicit financial flows in that sector is through corporate or commercial practices, where multinational corporations under declare the value of what they are exporting from our countries in terms of the quantities, in terms of the quality, in terms of the prices. So we are then not able to get a fair tax accruing to us as Africa. So that's the biggest avenue. It's about 65% of the losses is actually through the activities of the multinational corporations. Then you have another significant contributing factor coming through corruption, and you also have a significant factor coming through illegal activities. But if you had to look at percentages, about 65% is through commercial activities by big multinational corporations, especially in the extractive sector.
And with that being said, how can perhaps stronger regional cooperation help the continent retain more of its financial as well as natural resources?
It's at many levels. It starts with the way that we negotiate investment agreements. These big multinational corporations have mastered the art of playing one country against the other. So if you do not give a tax holiday for 20 years and you are Zimbabwe, will simply go to Botswana and Botswana will say, hey, we'll give you 30 years. Or we go to the next country. So it's important then that you optimize regional cooperation so that you plug that possibility of these big corporate actors playing one country against the other. And secondly, it also creates the possibility for us to have more harmonized tax policies. It allows for us to share best practices, and very significantly, especially at this time when there's big conversations globally about reforming the global financial architecture itself, a regional cooperation will create a united front or a united voice, a united African voice to make it much more effective for us to be heard when we sit at the negotiating table with other global partners. Regional cooperation is indispensable when you look at the victories that we are seeking to achieve in this fight against illicit financial flows.
You also mentioned corruption as one of the key contributors towards the bleeding of tax dollars or tax rands or whatever currency it is that we're speaking about. And with that in mind, what policy shifts or what reforms are most urgent to be able to strengthen tax justice on the continent, and as well as domestic resource mobilization? Is there an appetite from governments to do that?
We've seen especially that sometimes you have collusion between elites in our national leadership structures and corporate elites that completely undermine this fight against illicit financial flows and for tax justice. And some of that collusion ends up resulting in completely illogical and uneconomical terms being granted to corporations coming to operate in our extractive sector and in various sectors. I cited earlier the issue of tax holidays, the issue of even the percentage of the tax that you pay. If you look at the example of Zambia, you have a company there that went, a multinational corporation that went for more than 20 years declaring that they never made any profit, meaning that they never were taxed, but they were operating for 20 years. And when you have corruption, the national political elites can enable such a complete aberration to exist. So what we are doing just to close on that, is to really advocate for greater transparency and accountability to ensure that at the end of the day, you have companies paying a fair share of tax that can be directed towards the continent's economic transformation.
And it all speaks around, holding governments accountable and the role that academia, civil society play in doing that. But not just government, but also the multinationals. Mr. Briggs, Bomber Programs Manager at Trust Africa and a member of the Stop the Bleeding campaign. We thank you very much for your insight this afternoon. Thank you, sir.
A pleasure to speak to you. Thank you.
Thank you. He takes us to exactly 25 minutes after 4.
Darubini ya Afrika na I am Henry Shakif.
Raisi Yoweri Kaguta Museveni amezindua ilani ya chama tawala cha NRM ya kuanzia mwaka 2026 mpaka mwaka 2031. Taarifa hii ikoje?
Kweli kabisa, Rais Yoweri Kaguta Museveni muda mchache uliopita aliweza kuhutubia mkutano ambao uliohusisha wanachama wa Kongo na hali kadhalika wanachama waandamizi wa chama tawala cha NRM, yani National Resistance Movement.
Na katika kuzindua hiyo ilani yake ya chama tawala, pengine wana Uganda wamekuwa wana yapi ya kusema? Hisia zao zinaeleza nini haswa?
Kuna hisia tofauti. Kuna wale ambao wanamuunga mkono, wanaunga kauli ya Rais Museveni, lakini kuna wale ambao wanasema kwamba amekuwa akirudia mara kwa mara hayo matamshi.
Darubini ya Afrika kila Jumatatu hadi Ijumaa kuanzia saa 11 kamili hadi saa 12 kamili jioni majira ya Afrika ya Kati.
AUSISA, the Association of Water and Sanitation Institution of South Africa, is a platform uniting Africa's water professionals. This November, Africa leads the conversation on water and sanitation. Join global and African leaders at the AUSISA Africa and Global South Dialogue 2025 from the 9th till the 12th of November at the Emperor's Palace, Johannesburg. From policy innovation, this is where action meets collaboration for a water-secure future. Register today at ausisa-watersan-dialogue.org or follow at AUSISA on social media. AUSISA, working together for sustainable water and sanitation security in Africa. Africa in Business. Africa in Business delivers key insights and real-time updates on Africa's growing markets with Thami Ngubeni. The African Perspective on Channel Africa.
Channel Africa.
It is 27 minutes after 4 p.m., a very much anticipated conversation. Since the introduction of South Africa's two-pot retirement system, which is just over a year ago, it was in September of last year, about $3.3 billion, that equates to 57 billion rand, South African rands, has been withdrawn from retirement savings. About 4 million withdrawals were made under the new system, and 478,000 of these were repeat withdrawals. A report by an insurance company, Liberty, has found that many of the withdrawal claims were used to, perhaps unsurprisingly, pay off debt and cover education costs. For more on this, we joined on the line by John Taylor, who's head of corporate benefits consulting at Liberty. John, good to have you with us. Welcome to Africa in Business.
Thank you so much for having me, Thami.
So are these results surprising? My colleagues and I were actually just having a chat about this earlier on and asking, if you had withdrawn those funds, what would you have used them for? The fact that many were using them to pay off debts and to pay off education, loans, etc. Was this surprising for you?
I don't think it's too surprising that that's where some of the money went. I think I'm heartened by the fact that that seems to be where a lot of the money did flow towards. It's difficult to know with because it wasn't a requirement for anybody making a savings plan to submit a reason for it. But we are heartened by the fact that it seems to be the general trend where people said they were spending the money.
So apart from those two items, line items, what else were people spending their money on?
I think that there were some improvements on property. We did see a spike in used car registrations come through in September of last year, which is when the initial seeding and access was allowed. So I think there was a little bit of spend on those sorts of things. We did see a couple of dribs and drabs where people could say that they spent the money on discretionary spend as well, but that was in the minority.
Did any use that money for investments?
I think there were a few people, but I think in general it was used for consumption and paying off debt.
And can you take us through the profiles of those who made these withdrawals? Who did you talk to?
So in general, by our statistics as Liberty, we saw that the bulk of our withdrawals were for individuals aged 30 to 50, unsurprisingly, I guess. And in particular, we saw that there was a slight trend towards more females towards males, so about 55% males and 45% females making these withdrawals.
That's quite an interesting age bracket that you're looking at. Between 30 and 50 were the ones who were withdrawing their retirement funds?
Yes, correct. And I think it's partially to do with the fact that younger individuals possibly didn't have enough stage to be able to make a claim at our outset. And then on the scale where people are 50 and older, they might be the ones looking at retirement being more imminent and saying, look, maybe it's not so wise to defend. We did have some numbers there, but the majority were in that middle bracket.
And do we know the numbers of those who opted not to withdraw from their savings pot, who exercised a level of discipline there?
By our statistics, about 60% or 3 in 5 of our members at Liberty have not withdrawn yet, which was an encouraging number. That was the big unknown at the start of the system. So whether we see 100% take-up or 10% take-up, and the reality is we saw about 40%. So 2 in 5 members came forward. And when the new tax year started in South Africa on the 1st of March this year, we saw about half of those. So again, 1 in 5 of our total membership come forward to make a second claim.
And talking about that, we did at the start of the tax season, a number of taxpayers were shocked that they now owed the South African Revenue Services, SARS. How many of those withdrawals caused members to move into higher tax brackets? And is this something that they were aware of right from the start?
I think that was probably the big, not surprise, but I think it was the rude awakening for a lot of members at the outset was that when they made the claim, it would be taxed at the marginal rate, which is a lot higher than the average tax rate. It's effectively the next bracket that they would be moving to. So that was a big thing. And what we did see is members misunderstanding when they were asked for their taxable income for the year. Perhaps they didn't understand why it was being asked for. Maybe it's difficult to calculate that for themselves. But if you understated that, then there was the risk, in fact not the risk, the reality that at assessment stage, SARS was going to come and say, actually, you earned more than what you said up front. So we do have to caution that when making these savings plans withdrawals, be aware of the income tax implication and be aware that even if you don't state the correct taxable income at the point of claiming, at assessment stage, SARS is going to get their dues.
Oh, yes, SARS always has to take their bit. We thank you so much, John Taylor, for taking us through that report. And, just wondering if, with the next uptake, or people will actually be withdrawing, or maybe there might be a bit more caution. I guess we'll have to see. John Taylor, we thank you so much for your insight this afternoon. Much appreciated, sir.
Thanks very much.
Thank you. He's head of corporate benefits consulting at Liberty. He takes us to 33 minutes after 4 p.m. Central African time as we head over now to the markets desk where Nosipho Zuma is standing by with your latest market indicators.
Business News on Channel Africa. The African Perspective.
Thank you, Thami. Good afternoon. In your business indicators this hour, one US dollar is trading at 17 Rand 22 in South Africa, and Botswana is trading at 13 Pula 205. In Namibia, it is trading at 17 Namibian dollars 218. The Zambian kwacha is trading at 23 kwacha 78 to the US dollar. In Kenya, the dollar is trading at 128 shilling 49. In Ethiopia, it is trading at 144 bir 35. In Uganda, it is trading at 3,000 shilling 440. In Tanzania, it is trading at 2,000 shilling 454. $1 in Nigeria is trading at 1,000 Naira 470. In Egypt, the dollar is trading at 47 Egyptian pounds 72. In Tunisia, it is trading at 2 dinar 897. In Algeria, it is trading at 128 dinar 536. In Morocco, the dollar will cost you 9 dirham 10. In Angola, the dollar is trading at 912 kwanza, while the Congolese franc is trading at 2,500 to the US dollar. Looking at commodities, gold is trading at $3,942 and platinum at $1,611 per ounce. The price of Brent crude oil is at $65.59 a barrel. Now, for any business news stories you would like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa Business, I'm Nosipo Soma.
Business news on Channel Africa. The African perspective.
And standing by for the latest from the business of sport, a very good afternoon to you, Figile Lingwati.
Sports on Channel Africa. The African perspective.
Good afternoon, Thami. We begin with surfing. An international surfer from the rural village of Mtumbani in the Port St. John's in the South Africa's Eastern Cape province says rural sport development is lacking due to lack of government support and funds. Despite conquering a number of financial and sponsorship challenges, Avuile Ndamase continues to raise the South African flag.
Selected for the national team, which went to El Salvador now in September to represent the country at the World Surfing Championships, the International Surfing Association World Championships. In Alabo, we actually finished 13th in the world, which is really big considering us as the South African team. We don't get funds, we don't have coaches, we don't have managers. We finish higher than a lot of countries that have big programs, countries like Japan, and a lot of countries that have government funding.
Ndamase is the first black surfer in the history of South African sport and open surf team that represented South Africa at the 2025 World Surfing Championships in El Salvador. He explains further.
My points and the team collectively, we finished 13th out of 61 countries. And so that was really amazing. I feel like we did super well. We finished higher than countries with surfing programs that are old and very successful, like Japan. We finished higher than Japan. We finished the highest in African countries, with Morocco finishing 20th, and we finished like 7 places above them. So we did well. It shows the level that we are and the level that we have in South Africa, and especially for me as the first black person in the team, and showing the world that what I'm really built of. And with that, more funds and more sponsorships, I'm telling you, we could go even further. We could go all the way to gold for sure.
On to marathon, all roads lead to the Union Buildings in Tshwane on Sunday, where the Region 5 Marathon will set the capital ablaze. With entries continuing to roll in anticipation soaring, organizers are calling on athletes across Southern Africa to secure their spots in what is fast becoming the continent's most exciting new running spectacle. Offering $3,000 each for the 21.1 kilometer male and female winners, the Region 5 Marathon is raising the bar for regional competition, blending elite athletics, community spirit, and cultural celebration into one unforgettable experience. We will end with golf news, where the Limpopo Championship is expected to feature a strong field of established Sunshine Tour stars and a promising group of rising young Sunshine Tour players. The Sunshine Tour prize money breakdown includes individual tournament passes, typically around $116,000 to $203,000, a significant end-of-season bonuses for top performers on the order of merit, with $29,000 first-place finisher. Additionally, the Fortress Rookie of the Year receives a large bonus, and the DP World Tour cards are awarded top finishers. The end of the season bonuses: first place $29,000, second place $11,000, and the third place $6,000. For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. This is Channel Africa Sport with me, Figile Lingwati.
Sports on Channel Africa. The African perspective. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
Amajita are through to the knockout round of the FIFA Under-20 World Cup. Be with us this Wednesday at 9:30 p.m. as South Africa's Under-20s face Colombia. This is streaming live on SABC+. And there's more. Other Under-20 World Cup matches are also streaming live on SABC+, with selected fixtures on SABC Sport Channel and SABC1. Wave the flag, Mzansi. Stand up for Amajita. The FIFA Under-20 World Cup. Amajita coverage on SABC+, powered by SABC Sport.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus. Channel Africa, the African perspective.
Now, South Africa's mining sector has not been able to tap into vast mineral riches from its neighbours and has been inward-looking. That is, at least according to Otsile Matlo, Chief Operating Officer at ENS Africa. Matlo told the Johannesburg Mining Indaba, which brought together hundreds of industry leaders, that there isn't adequate trade happening among African economies, and this is despite the establishment of the African Continental Free Trade Area. Dimakatso Lishoro reports.
Africa continues to bleed wealth. Every day, tons of gold, platinum, cobalt and diamonds leave the continent, yet the people who live about this treasure remain trapped in poverty. The problem, says Utsile Matlo, Chief Operating Officer at ENS Africa, is that there isn't a real market on the continent for countries to trade with each other. He says this needs to be cultivated.
The free trade continental arrangement is a very good thing. The continent needs it, but of course you must implement. The problem is there is not enough of an existing commercial market on the continent for African countries to trade one with the other, and so that needs to be cultivated. We've got the numbers, we've got the population, we've got the need across mineral commodities, and if we can do it very well, we can leverage this thing.
This is a view that was echoed by Chief Economist at PwC, Lulu Krugel. She highlighted the continent's slow response to its own opportunities that has allowed foreign powers and private companies to dominate the game.
There's a very, very real risk that we might have been too slow. I don't think the opportunity is completely passed, but one of the key things that we are seeing is that we see the end of these big multilateral agreements and what we call mini-lateral. You look after me, I look after you, etc. And geographically, just where we are, we have to be closer to our neighbours. So I do really believe it's an opportunity, but we need to move. We've been talking about it for a long time.
Matlo says across Africa, short-term thinking has left mining towns polluted, jobless and forgotten, while elites buy luxury cars and second homes abroad.
African politicians need to love the continent, and they need to work for the continent and not for themselves. Even in countries where the poverty is shooting through the roof, the politicians' private wealth is also shooting through the roof. And that's mostly because of short-term decisions that have very little to do with the interest of the people. And so we think we need a new class of political leaders on the continent who are serious about the continent.
South Africa's mining sector has been under pressure, plagued by lack of reliable power and logistical challenges, coupled with onerous regulatory requirements that have become barriers for companies to invest and grow. President of the Mineral Council South Africa, Paul Dunn, says this needs to be reconsidered.
But we need a stable, regulatory, predictable environment that promotes both. A mining industry that attracts both local and international capital for the development of new mines, the expansion of existing operations. Mining matters to our economy too, as you all know. It accounts for 6% of GDP and 800 billion rands worth of exported mineral products, representing 45% of total exports of the country. It's critical for mining companies and investors throughout the value chain to have a pragmatic, stable regulatory environment that attracts investment rather than discourages it by onerous globally uncompetitive policy.
He also lamented amendments to the Mining Act, saying they're adding to the problems.
It is our considered view that the proposed Minerals Amendment Bill, in its original form, does not encourage or sustain the growth and investment that the mining industry needs to realize its full potential, to create employment, to stimulate the economy, and to fulfill its social mandate.
Over the years, South Africa's economy has remained stagnant because of, among other things, energy uncertainty that have threatened smelters and local industries. Vuslad Boyklu, co-founder and managing director at MENAR, says African economies need baseload to ensure energy certainty to investors.
We've got 59 furnaces, ferrochrome furnaces. There are 2 of them working at the moment. We're talking about like hundreds of thousands of jobs. So these smelters need power, and you cannot power a smelter with solar panels. You can power your house with a solar panel, okay? Because that works 6 hours a day. The wind blows 5 hours a day. But you need something that's baseload, that's going to power our economy so that we can create jobs, because we don't have Silicon Valley. And we must also, like the topic of the panel, this geopolitical shifts, we should be careful being part of another country's agenda. Because we saw that with the wind and solar, it didn't work. Okay, now we're talking about the trade, and we should not be part of another country's agenda, because countries need us, but China needs us more than we need China.
For Channel Africa News, I'm Dimagazo Lishoro in Johannesburg.
Africa. It's time to plug into the heartbeat of the continent. Tune in to Channel Africa, your go-to radio station that broadcasts in 5 different languages.
L'Afrique du Sud célèbre la journée nationale du
Kabla hujaitwa kwa jina la Double K,
or more of our forests have been destroyed. Partido Africano da Independência da Guiné.
Channel Africa represents every corner of this amazing land. From Lagos to Cape Town, Nairobi to Dakar, we've got you covered with the freshest news, music, and cultures. So, turn up the volume, feel the rhythm. Enjoy the conversation. Channel Africa, the African perspective. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
South Africa's healthcare system could collapse in the future. That is, of course, if nothing is done to address the dire challenges facing the health sector. This was one of the issues highlighted at the Health Association of South Africa HASA conference that took place over the past 2 days at the Sandton Convention Centre, north of Johannesburg in South Africa. Thami Ngubeni compiled this report.
The discussions were loud and clear. There's an urgent need to respond to the pressing challenges facing South Africa's healthcare system. The delegates attending the 2025 edition of the Hospital Association of South Africa HASA conference at the Sandton Convention Centre agreed on this pressing issue. The 2-day conference, which ran from Monday under the theme Sustainable Healthcare Together, also hosted an exhibition showcasing the latest innovation and technology in the sector. The event shone the spotlight on resilience and innovation as a new era heralded by digital transformation that informs the way things are being done globally across all sectors. The conference was organized by the HASA board, which is nominated and elected annually from among member groups, with board members serving voluntarily. Dr. Bianca Mentur is part of the outgoing board that organized this year's conference. Mentur says the conference was a success.
It's been a really, really fascinating 2 days. It's an annual gathering that I think a lot of us look forward to. I do think it's been a success. Having said that, though, I think the true marker is going to be what follows, the action that follows from these very meaningful conversations we've been able to have. The program this year has looked different to in previous years. We've got a really good mix of insights into innovations that are happening locally and internationally that give us the impression that we really are on the cusp of something great in healthcare in terms of the revolution that's coming with digitization and technological advancements. And then coupled with that, the kind of policy questions that were tabled around where to from here, who's taking action, and why have we not yet taken the action? So yeah, I think the real metric of success will be the days and weeks to follow.
Mentor says what was clear during the discussions throughout the 2 days was that the Southern African nation's healthcare system is in trouble, and the response to this should be top priority so that citizens can enjoy functional healthcare services.
What we've also seen is a great alignment around the fact that healthcare in South Africa is in crisis. And a lot of the topics that we've heard over the last 2 days have reflected that in terms of the urgency that we need to start adopting and how we start to address the challenges we're facing.
Furthermore, Mentor says the delegates spoke in one voice, calling for all stakeholders to urgently come to the table to find solutions to the current disaster facing the country's healthcare system.
So there's been a lot of call for action and a lot less talk kind of been tabled through these 2 days. So the urgent kind of clarion call that I've at least received from these 2 days has been, guys, we need to figure something out as a collective so we can chart the way forward. We can no longer try to solve this in isolation. And as I said, the real metric is going to be once we leave here and go back to kind of business as usual, do we take heed of this and do we then act as a collective, sit down, cross the divide, be it within the private sector or between public and private? Are we bold enough and courageous enough to take action now before it's too late?
Meanwhile, Mandy Topkin, who was also part of the outgoing board, also agreed that the current state of the country's healthcare system is dependent on all relevant parties, regardless of whether they are in the public or private sector. She warned that if nothing is done to address these problems, the system could fold.
NHI is not the central discussion of this conference at all, because whether NHI happens or not, in the end, it's not about NHI, it's not about private sector, it's not about the public sector, it's about the people of this country who deserve healthcare.
It is exactly 4:51 Central African time as we turn our focus now to the markets. And for a look at the latest business and financial markets, we're joined this afternoon by Lindile Malchas, investment strategist at Absa Investments. A very good afternoon to you, Lindile. Good to have you with us once again. Welcome.
Good afternoon and good afternoon to the listeners. Always glad to talk on markets.
That's great. So let's perhaps start with an overview of the latest performance in both global and local markets.
So we are seeing markets have rebounded today after the declines we saw yesterday. So the European and UK markets are in the green, and so far since market open, we are seeing the US markets also trading higher. And then bringing it back to our local markets, the all share, similar to what we're seeing globally, has rebounded. It's up about 1% today, mainly being driven by resources. They are benefiting from a higher gold and platinum prices. We are now seeing gold trading above $4,000 per ounce. And then we are seeing what has also performed is industrials, those in the green, up 0.6%. Financial struggling, down 0.1%. Then we are seeing the local currency that continuing to strengthen on the back of a weaker dollar, so trading around 17 Rand 15 to the dollar.
If we look at Mondi PLC, they issued a Q3 trading update, and this resulted in a share price drop of over 16%, and this was in just one day. Can you give us an update on the reasons behind this decline?
Yes, so you pointed out that it is down about 16%. Markets didn't like the results, so the share is trading at lows and all-time lows as well. And on the back of that update, they are expecting the EBITDA numbers. They're expecting those to come in 36% lower. It is more of a cyclical company in nature, so the company is facing a lot of subdued demand, and also seeing paper selling prices falling. And as a result of that, you are seeing sales volumes coming in lower as well. and they have also tried to schedule more maintenance shutdowns, and that's to mitigate the impact of some of the softness we are seeing in the markets, and then some of the action that the company is taking in response to some of these macro challenges that they are seeing. They are looking at streamlining their operations, so they have reorganized their two business units. The corrugated packaging business now includes the uncoated fine paper, and then the flexible packaging business will stay the same essentially. And we did see on the back of that markets not liking those results, but we do think it is more of a broader macro effect on the company on the back of lower demand as well.
And come Thursday, which is tomorrow, we are expecting Stats SA to release the manufacturing production data. What are your expectations for the sector's performance?
So far since the start of the year, manufacturing activity has had more of a mixed performance to the year. So in the first quarter, we saw a contraction of manufacturing activity, and that contributed negatively to GDP. And then subsequently to that, we did see the sector recovering in the second quarter. And since the start of the third quarter, it has had a weak start. So look at the July figures, that was down about 0.5%, but markets are expecting it to rebound by a similar 0.5%. We still do think there's some downside risk within the manufacturing industry, as you are seeing some of the manufacturers from a confidence point of view. Confidence is quite depressed in the sector, and this is being driven by cost pressures as well as uncertainty on global trade policy as well.
Lindy Lamalchas, we'll leave it at that for this afternoon. Thank you so much.
Thanks, Thami.
All right, have a great one. That's Lindy Lamalchas, investment strategist at Absa Investments. It is exactly 5 minutes to 5 p.m. Central African time. Just a quick reminder of some of the stories that we brought for you today. We did look at the state of tax in Africa, on the entire African continent. And this is on the backdrop of the 13th Pan-African Conference on Illicit Financial Flows, a conversation with Mr. Briggs Bomba, who's programs manager for Trust Africa and also a member of the Stop Bleeding campaign. He did highlight that there are some improvements in tax compliance, but still the areas where there remains extensive bleeding is in the extractive sector. So we're talking minerals here. Collusion and corruption also still a very big problem, with multinationals still getting away with underreporting, as well as not sharing accurate information as far as the export quantities are concerned. We also looked at the latest from the use of retirement funds, retirement savings that were extracted in 2 cycles. We spoke to Liberty there and how South Africans are using that money. But I guess the good news that came out of that is that 60% have not withdrawn their funds. And I think that was a surprise. But also what a surprise for me was the fact that those between the ages of 30 and 50 were the ones who were actually accessing these retirement funds. That's just part of what we brought and had in store for you. If you missed any of this, you certainly will be able to find it on all our various social media platforms at Channel Africa 1 or on Facebook at Channel Africa. And we say bonjour to the jolie Joël as we get ready for Vue d'Afrique.
Bonjour, Thami.
You look amazing. I love that fabric.
Really, merci
Very
beaucoup,
nice.
Thami. Bonjour à tous les auditeurs de Channel Africa. Sur Vue d'Afrique, il sera question du Burkina Faso. L'ONG INSO réfute les accusations d'espionnage et de trahison. Nous parlerons également du scrutin présidentiel de dimanche au Cameroun. Merci, Thami.
Merci beaucoup, mademoiselle. Well, that's how we come to the end of this Wednesday edition of Africa in Business as we make our way for the French desk and Vue d'Afrique. Thank you to our amazing team on the news desk, Ujwala Netulongwebe, economics desk, Nosipo Zuma, and sport, Figile Lingwati. Our producer today, Ma Bobulok, a technical producer, it's not Ndando Lutuli, but social media talent Butelezi. I am Thami Ngubeni. This has been Africa in Business on Channel Africa. Until we meet again, you have yourself a splendid afternoon further.